Hi, this is Jim Lane, the Economic Realist. This is going to be a really quick video just highlighting my monthly newsletter that I published late last week. First of all, I want to say my outlook for 2026 is that we will see substantially lower short-term interest rates driven by continued weakness in employment and the labor market. We definitely saw some telling signals in the most recent employment report that came out December 16th that indicated that the pretty telling U6 unemployment rate, which rose above 8.5%, creating a very wide spread between U3 and U6, which has been telling in the past. It was telling as we entered the Great Recession. It was telling in the unemployment spike related to COVID-19 and that pandemic and subsequent interest rate reductions, as well as federal stimulus. I think in light of this, we're going to see very strong performance of, at least relative performance, of income-producing assets such as real estate investment trusts that don't have a lot of cyclical exposure, such as energy MLPs, which were all the rage just a few years ago when interest rates were much lower. And I also highlighted core in Maine, which is really a long-term play. I don't know what the stock's going to do in 2026, but I think it is a beneficiary of secular tailwinds in the water infrastructure space. The residential development market has been weak. That could be helped by lower interest rates, but we'll have to see how lower short-term rates impact long-term rates, and will that get developers off the sideline and building more, because core in Maine provides a lot of the water infrastructure for new residential developments. 40% of the business is commercial related, again, real estate development, and 40% of it is municipality related, which is probably its strongest, steadiest business. And then 20% is historically has been residential real estate development. Wishing you the best in 2026, and hope you get a chance to look at our newsletter and recent commentary about stock performance in 2026.